Good morning, happy Friday, and welcome to this week's episode of Sunrise Small Talk. This week is going to kick off a little bit of a series. Could be 3, maybe 4 episodes. And what I'm going to talk about is your portfolio construction. I'm going to tell you about some of the insights and the thoughts that some of the managers are giving us right now. Q1 was a volatile quarter in 2026, just like it was in 2025. And as such, as you know, you're going to get more notifications from Schwab, Fidelity, more trade rationales from Carson that say bought this, sold that. When you see those from Schwab and Fidelity, they don't tell you why, but when you see the trade rationale from Carson's emails, you'll actually get a little bit of insight as to what's going on behind it. So I want to dive in. As you can see on the board behind me, there's a lot of names, a lot of words up here. I want to dive into some of the specific manager highlights and thoughts as they assess the economy and address what they're thinking and how they're positioning their portfolios. So here we go. Let's dive right in. Okay, number one, first and foremost, I want to talk about just kind of in general. And when I say in general, I mean Carson portfolios. I think the most basic Carson portfolio that I can talk about is the Carson House View strategic models. We have a very conservative, moderate, growth, and aggressive. Those all fit with inside the Carson House View strategic. Strategic meaning it's more of a buy and hold philosophy. So I just want to talk about year to date, how that has performed versus its benchmark. So March 30th was the low in the market, and on March 30th, the benchmark was down 3.1%. Carson House Views was down 3.03%. So down a few percent, no big deal there. Not down quite as much as the benchmark, but really pretty much the same, about 3% for each. As of the recording of this video, Carson House Views is up plus 5.1% year to date, and the benchmark is up 4.9% year to date. So nice little outperformance on the benchmark, both on the low and the high. So I think that's really important. Okay, now I'm going to dive into just my map here. These are not all the companies and the managers that we have available at Carson. What do I mean by companies and managers? Well, let me name a couple because I think that will help tell the story. Right here, JP Morgan. They're on our platform. So we're able to use JP Morgan's models on our platform, which is great. Great company. We all know of JP Morgan. PIMCO, this is one you've definitely heard of if you follow money and markets and watch CNBC. I can't say or read the word PIMCO without thinking about early on in my career when I had no clients and I just sat around and watched CNBC all day, and all their commercials said, I think it was PIMCO, the global authority on bonds. So that is their self-proclaimed title. They consider themselves the masters in the bond and fixed income arena. And I think a lot of people probably wouldn't disagree with it. That's their specialty. That's where they focus. Wisdom Tree, big mutual fund company that's been around forever. So those are just some of the names. And in the future episodes of this little series I'm going to talk about their market outlook and the way they are analyzing not only the US economy, but the global economy and how they're positioning their portfolios. So as you can see, I've kind of broken this down. I've got some blue names on the left and some green names on the right under the appropriate heading. Over here, the blue names are more ETF fund, mutual fund based, meaning those are just giant pools of investments, and they are not targeting specific stocks and equities. Over here, we've got the individual equity-based portfolios. In the green, those are just as they say, they own specific stocks, and they're trading, buying, and selling stocks. So again, when you see your trade notifications from Schwab, Fidelity, it's not going to tell you exactly why. It's not going to tell you the rationale behind those trades like you'll see in the Carson emails that you get, but you will see the name. And sometimes those names are going to be something like SPY, which is the S&P 500 index fund. Over on this side of things, over here, you'll see individual stocks: Oracle, Microsoft, Philip Morris, whatever it is. So that's really the difference there. And as I look at this board, I think the most important takeaway that I want to leave you with today before I continue the series in the upcoming weeks is the best way to design a portfolio, and this is just kind of my opinion, I think a lot of folks in my shoes would agree with this, but the best way to design a portfolio is not just to focus on one thing. For example, if we look at, say, trend following, that's a strategy. Trend following is what's hot. What's hot right now? Well, last few years, AI was super hot. Guess what? Really isn't that great right now. AI has come back down from its highs quite significantly in the last several months. So would it make sense to always be trend following and always think about what's hot? I want to chase the hot stock is the term that we hear. No, it doesn't make sense. Does it make sense to have a component of that in your portfolio? Yeah, probably so, but it's not the one and only thing you should have in the portfolio. Trend following, factor enhanced, dividends, growth, global. These are all things that need to be inside a well-constructed portfolio versus just focusing on one item. In addition to that, I and Carson were completely agnostic as to the managers inside the portfolio. So some of these growth leaders, Carson manages that. Let's see, trend, Carson manages that. So some of these Carson is going to manage. I think that's great because I can call up the portfolio managers, anyone on the investment committee anytime and talk to them, whereas if I call up a portfolio manager at JP Morgan Chase, probably not going to talk to me. That said, I think it's important to have not only diversification amongst your strategy, but also amongst your managers, which is why if you log into your portal and look, you're going to see a bunch of different names inside the accounts that you own. Those are different managers because every manager is going to look at things a little bit differently. Whether they're right or wrong, we don't have a crystal ball, so we don't know. The best way to do it is just to come up with the best ideas that resonate with your own personal thoughts on the market and investing. Are you a buy and hold investor? Are you an active investor? Are you a combination of both, which to me makes the most sense? But that's really the best way to do it, just to have diversification among strategies, styles, sectors, industries, US, global, and manager diversification within that. So next week, I'm going to jump into JP Morgan just to give talk about some of their most recent quarterly comments. I might try to mix in Wisdom Tree or PIMCO as well, and then go into some of the more specific trades and activity that you've seen within these portfolios, talk about the rationale and the reasoning behind that. So for those of you who don't care and don't really watch it, you probably just tune out the next few weeks because you're going to be pretty bored. I love talking about this stuff, but I will say, and I can't stress this enough, don't ever chase performance. That will get you in trouble. Over the course of my time doing this, the folks who are always chasing performance, what about this, what about that, they have the worst performance over time. There's actually been studies that show the more often you log into your account, the worse your performance is. I think TD Ameritrade did that study actually a long time ago. They actually showed that the more logins an individual had, there was a direct relationship, inverse relationship to performance. More logins, worse performance. So the market's going to market. It's going to do what it's going to do. We can't control it. The best thing we can do is just construct a portfolio that's designed to weather storms and take advantage when things are good and play a little bit of defense when things are bad. Just like we did up there in the Carson House views so far year to date. All right, have a great weekend. We've got playoffs starting. I'm not a big basketball watcher, but obviously I love the Avs and Stanley Cup favorites. And I heard that at Ball Arena this weekend, we were going to have home games Saturday, Sunday, Monday, Tuesday, alternating between Nuggets and Avs. So that's pretty cool. Go Denver Sports. See you later.